Well, BTSC time. The market is off the lowest point of the day. That's because of some kind of recovery that you're seeing in European markets. So the Nifty is slightly off the low point of the day. But remember, on Friday also we had this. The market didn't really close at the lowest point, and in last half an hour had some recovery, and which was used as an ammunition to only sell into. And today we had that gap down. So you never know if something similar is going to play out. But for now, we are off the lowest point, and the Bank Nifty is down about 324 points. Ashwini and Mitesh with us for BTST calls. Ashwini, your thoughts? There's a minor bit of recovery on the index, but still down quite a bit. Thoughts on index and your stock calls?
For the last 2 or 3 hours, we have not broken this 11,340, 350. And now what you are seeing is some amount of short covering. So A, my sense is that in the last half an hour, the short covering could pick up. And B, in terms of BTST, because the market has made some sort of an intraday bottom around this 330, 340, my sense is that in case US markets don't close as badly, etc., there could be a fairly swift early morning move on the Nifty. So that way I have stakes on the long side on the Nifty. Having said that, individual stocks, Manappuram is a buy with a stop of 116, target of 124. IRB is a buy with a stop of 142, is a sell with a stop of 142, target of 130. And ONGC is up 3%, so that's a buy with a stop of 152, target of 164.
So Ashwini, just to clarify the Nifty trade, you're not, you've closed off any intraday shorts that you had and now you're looking to carry longs into tomorrow. Is that right, if I got that right?
Yes, intraday shorts have been closed and intraday longs have been taken because Europe is not showing follow through. Often when that happens, US also does not show follow through. That way, people who are trapped today in the Indian market, they are likely to face a gap up.
Fair enough. Mitesh is also with us. Mitesh, your thoughts and your stock calls?
Yeah. So I think again, we were looking at somewhere around 11,350, 320 hold out. It's just kind of managed to survive those levels. So for the time being, we're trading with mixed bias, but the idea is that in case you get an intraday reversal after some kind of testing of this level, maybe tomorrow morning again, then I think it would be a good long trade. For the time being, I have a sell on Cummins with a stop at 735 for targets of 700, and Infosys is a buy with a stop at 726 for targets of 752.
Okay, those are a couple of calls you can work with in the last 20 odd minutes of trade. Amrish, please help me understand what's happening with the REC. I mean, even PFC is up 5%. What am I missing here? There's going to be a merger. I mean, REC's 52% government holding, is being bought by
true.
PFC. Obviously, there'll be no open offer, right? Because this is a government-to-government exchange.
It is basically one pocket to another pocket.
Yeah.
And
So what explains this?
At the same time, over the weekend also, we were, seeing that news of the sort of NPAs which are going to be there for the discoms. After that, if the stock moves up like this, and if you have in the portfolio, it's surely time to book some profits, exit, and that's exactly what I did in the first 2 hours today.
Okay, Amrish, thanks a lot for joining us today. What happens nowadays? We get live delivery data on the stocks. So I'm looking at the REC stock, and at 3 p.m. we get the data at 1 p.m., 2 p.m., then 3 p.m. So at 3 p.m. the delivery data that exchange is showing is 2.1 crore shares. 2.1 crore shares of REC being delivered till about 2 p.m. Price of 155, so almost 300 crores of delivery-based buying. Now, Nimesh was, telling us that perhaps because of this ETF, this CPS ETF issue, there could be some, strong delivery buying. Now, how much of that is done and how much of that is still left, we don't know. But 10% higher is what you have on the stock. So that part explains the kind of move that we've seen. 2 crores of delivery volumes till now. My sense is by the time we close, would be somewhere around 2.3, 2.4 crore in terms of delivery volumes.
Oh, those are some great stats to keep in mind. Obviously, maybe it is CPSE ETF because look at BHEL and BCC. A lot of these PSUs have had a decent run in today's action. Anyway, it's Monday, so as promised, it's time to move on to Midcap Mania. Nigel is here with us. Let's see what's on his radar today. Nigel.
Well, in keeping with the IPL theme, over the weekend we saw CSK play a rather good match, and just keeping with that, one of the sponsors of the CSK team is in fact HIL. So that's really the stock on our radar. The market capitalization is at around 1,350 crores. If you're looking at it in the last 1 year, the stock had moved from around 1,400 all the way to around 2,600 in 2018. But from the top, it's corrected nearly around 29 to around 30% approximately. Now, in terms of numbers, it's been quite good. The first 9 months, you've seen a good growth in terms of top line, nearly around a 20% growth out there. Margins have expanded, and net profit as well has jumped up to around 86 crores. So the first 9 months have been fairly good for the company. They have 3 segments basically. The roofing segment, that's really the core business, and that's been the erstwhile business as well. That has grown by nearly around 10%. But the building solutions business, that's grown very, very well. And the new segment is the pipes business. Out there, they were doing almost only around 20-30 crores odd. Now, with this year, in the first 9 months itself, they've already done 85 crores, and they're on target to do nearly around 115 to around 120 crores for the year. So 3 segments of the business. One is really the Charminar business. That's the asbestos sheets and the non-asbestos sheets as well. They have also their Fortune brand. That's Charminar Fortune brand that they've launched. The second part of their business is the Aerocon business. So out there, you're talking about wall putty, dry as well as wet, and also building blocks. So that's the second part of the business. And now all eyes really are on the other growing business. That's the pipes business, which has been growing at a very, very fast clip. The newly acquired business, though, is Parador. Some part of the street is doubting this acquisition. They were not very, very happy because if you just see the stock price correction as well, the stock is corrected after this acquisition. So how this business, that's the flooring space business, gets incorporated into their consolidated books is going to be very, very keen. Quickly, we should just pull up one plate. That will tell you the 3 businesses: the roofing business, the building business, as well as the Parador business. So these are the 3 segments of the business. Currently, you have the pipes and fittings business. And later on in the next year, that's in FY20, we'll be looking at the Parador business as well. Now, moving on then, the acquisition that they made was for around 80 million euros approximately. Remember, this business is doing a turnover of around 140 million euros. Why did they do this? Well, it's marking the entry into the flooring solution space, one-stop shop for building products as well as solutions, and also it's giving them a chance to cross-sell their products. So this plant really is in Germany as well as in Austria. Maybe they'll see some kind of flooring sales even in India, giving them a new market. 140 million euros is what they have done in terms of sales. Margins of roughly around 7% approximately. They're functioning at less than 70% capacity utilization levels. So moving up in terms of revenues out there is going to be important. Short point, the management has told us here on CNBC TV 18 that this deal is EPS accretive, even after taking into account the debt in their books as well as the interest that they'll be paying out there. The key montrables going ahead then, the bread and butter business, the traditional business, the roofing business, that's the asbestos business, as well as the non-asbestos sheets. So can they maintain a fairly stable number out there? The pipes business, I told you, is growing very, very well. Can they break even out there? And most importantly, the integration of the Parador business in FY20 is going to be very, very crucial. Finally, in FY21 onwards, you'll be seeing some debt reduction. Can they start doing that? That's going to be crucial as well going ahead. Now, if you're looking at a valuation multiple, well, the street is working with a number of maybe around 170 rupees in terms of an EPS number. You give an asbestos business around 10 times multiple or thereabouts. So that comes to around 1,700 rupees approximately. But because they've diversified into non-asbestos, maybe they can do around 12 to around 15 times in terms of a multiple. And then, in fact, you'll get your target price. Big worry, though, is we're talking about a global slowdown all since morning. That Parador acquisition could be a bit of a worry if that doesn't really take off. Back to you guys.
Okay, all right, Nigel, interesting stuff there. Thanks very much. Just a reminder that this is not a stock recommendation. It is some analysis and research that Nigel has put together. We will take